Just want to tell you guys, after a couple of years, I tried WealthLab 8 and it's fantastic. I thought it was going to take me months to get it configured and it's taken a week. It's very thrilled with it.
Good to hear.
Glad to hear that, Eugene.
So I'm eager to move forward. There's a lot in it I haven't discovered. Every day you discover something that has bothered me for years. It was other stuff, and you fixed it. You've done it. You just had a brilliant solution to it. So it's very fast. It's the best charts of anything I've ever seen. It just really works. So I guess I can stop here.
That's good.
I'm very impressed.
It's good to hear, and I hope that Dion hears it. Here he is.
Oh, your check's in the mail, Eugene. Thanks.
Oh, yeah. Well, I put so much work into WealthLab developer, and I thought, how am I going to do it? But I was able to get the code working pretty fast. But just the things you did in the regular charts were really good, and so I think I'm making a lot better decisions with it. Actually, so far so good. I've been able to catch things very well. So
great. So yeah, it's really wonderful, Eugene, to hear you and to have you here. After all these years, I remember we met like
20
I
years
don't know.
or something. I think it's been 20 years. I had your very first versions.
Yeah. It's about 20 years now. Yeah, it's amazing. Yeah, and I still remember your what was it? Your niece, your daughter, something like this, and she was at one of the Traders Expo. Obviously, I remember her just as well as I remember you.
It's prettier.
Absolutely. So yeah, that was definitely something. No, but you're such a nice guy, and I remember you very well. So Robert, there's still 2 minutes. We had about 60 people registering, and so let's see how many make it. I think a lot of people are not aware of the time. That's one of the things. And they know you were doing it. Do you get that noise as well? Anyone else gets that? Robert, do you get that too if people want to get in? I think you can actually, I think I already made it so that you can actually take over and show your monitor. You want to?
No, it says that it's disabled. Participant. Let me just share the screen. Okay. All right.
I think I made it so that everyone else can take over now and share the screen, but I think we all agree we let Robert do that.
Yeah, we'll give it a try today.
Yeah.
All right.
Thanks everybody for coming. This will be another interesting session. We had an option session a few months ago, I think, with Robert, who is the option guy, not only option, but also the option guy. And yeah, so he will show you some interesting things. I'm not sure how large this font size is on your computer. On mine is small, but I don't know. I'm going to increase my 32-inch monitor and put it all over the place now. And then hopefully I get a better picture of it. So thanks for coming and hope you can learn something. And feel free, Robert, give people a chance to ask. I see you have some notes here that you want to talk about. Good. But in between, give people a chance to ask questions, and you can actually, I don't know whether you can raise your hand or you can type, and I will monitor whatever you are typing, and then I can throw it in between. So yeah, so thanks for coming once again, and Robert will show us his magic.
Well, no magic here, but we'll start with the disclaimer that we're not promoting the use of options in your trading. You can lose 100% of your investment and even an unlimited amount with short contracts. So, but the idea here is to show you what you can do in WealthLab with options and actually auto trade options. You can actually see, I've got a workspace set up. It might be a little bit busy, but I just wanted to get this going so that you could see that things are happening while I'm talking about other things. I've got these 1-minute charts set up, and we've got a couple underliers trading options, and this is actually trading stock contract, the Tesla stock. So we have something to, I want to show you the difference in the strategies and what it takes to do that. So, but the thing is, I think the biggest question when we get started talking about options is that you really need to start working with the data. The data is everything, right? And in options, it's even more. So let's see, let me get my notes again. I can't remember where it was. There it is. Okay. So yeah, so the options for options data, right? we've actually done quite a bit of work getting a lot of the broker providers set up to trade options, and a lot of them have data that you can get for stocks and options and whatever other products that they have. But there's differences in all of them. There's different symbols. There's, and so if you're, for example, using IQ Feed is probably the best and fastest provider for stocks and option data even, although I really can't speak to the option data too much. I know that it works, it's just that we don't have it in our subscriptions. So, but the thing is, if you're using IQ Feed, well, it's going to give you a different symbol for its option chain that's than the symbol that's used to trade at Tradier or to trade at Schwab or to trade at IB. They're all different. But we've got tools and classes that you can call that really easily. You can go take data from one provider and then trade it with another. And I kind of want to start there and show you and I do have, let me grab a script that I called the options bar comparison. Okay. Yeah, probably. Let me show, well, let's see. Where do I want to start with this one? Let's just go ahead and run the test. Where are we starting here? We should be starting with, okay, so go back to my notes. Yeah. Okay, so the thing about options, generally, anybody that's probably interested in trading options, we're going to be working with intraday data. And in fact, if you're getting option data with Tradier or Interactive Brokers, you only have access to intraday. They only supply intraday data. So if you want a daily bar of options, you'd have to scale it yourself anyway. But the thing I want to show you is options data. Typically, when you're trading options, the contracts are, well, they can be liquid contracts, especially if you're trading like index options. But other options like this one that we're looking at here is actually a pretty illiquid contract, and it doesn't trade very often. Although what you're seeing here at the top of the screen is as far as I know, at least from the providers that we have, Interactive Brokers is the only one that has this, is midpoint pricing. Okay, so the midpoint pricing gives us, you can see how it follows the bars in lockstep throughout the day, right? So for every, I think, are we looking at 1 minute bars here or 5 minute bars? Yeah, so, well, it doesn't really matter, but so for each 5 minute bar, you can see that there's, a midpoint. Well, it's actually the options midpoint pricing. So we have a bar created from midpoint, from between the bid and the ask, right? And this is the kind of data that you would need if you were actually backtesting with options. And I'm going to show you why. Because if I'm going to click this parameter here, and you're going to see this. This is actually, now what you're seeing, these green bars that you see behind this are actually the trades that actually occurred on this contract. So you can see that if you were creating a backtest with the trade data, it's not going to be very true to life, right? You're getting, for example, let's say you were buying at market on this bar. Well, this is where the bid and the ask were. Well, the midpoint of the bid and the ask would be the open of this bar, right? Well, actually, it would be the next bar. So this would be where the trade would occur. But if you were backtesting with trade data, you're going to be working with this basically stale data from the trade that occurred back here. Okay, so that's probably the most important point for backtesting. Now, the other thing is that we have synthetic bars, and you're going to be surprised to see how good those work, because I'm going to click this button again. And now what you see, the cyan bars here, the blue ones, are the synthetic bars that we've created with the Black-Scholes model and based on the price history. Now, the thing about getting them precisely at the right price, you can see that it's a pretty good model. Let's go back to where they're a little bit separated. You can see that they're following the actual pricing quite well, right? But they're just off by kind of a DC level. I like to be an electrical engineer. I would call that we have your AC current and we have the DC level. So it's just off by kind of almost a constant price, right? And that's really determined by knowing what the implied volatility is. Okay, and of course that's the sticky point when you're trying to get options data. If you knew what the implied volatility actually was, you could get a pretty good model of what the prices were. And I'm going to kind of prove that. Hopefully this works. I've got another button here. I'm just going to grab what the actual implied volatility of that contract is right now. Right. Okay. So we're actually trading today here. So we're getting the implied volatility for today. And you can see how the yellow bars now, which are based on this implied volatility that I pulled out of the Greeks. I made a Greek request, which I'm going to show you how to do later for this contract, which tells me what the implied volatility is. And so I use that when I created my synthetic bars. Okay. And you can see that they line up quite well on top of the bid ask model, which is the actual prices, right, of the option. Any questions so far?
Robert,
I hear something going on. Yeah.
Yeah, I find it interesting. The white one is definitely, no, the white one is the real price, right? And
it's the real midpoint pricing. So if you actually look
that's
at the
okay.
prices,
I know enough. So in principle, this data could be used. The difference between the various bars might be kind of true. It looks like it is. If I would have sold on the first bar on the left and I would have bought on the and I would have bought back on the last bar on the right, I kind of would have had pretty much the result that we see, right?
Yeah, that's kind of where I'm going. But like I said, we grabbed the implied volatility for today and applied it. And so you can see how it lined up quite well. But that wasn't that implied volatility is a little bit too high for what it was yesterday. So that's why the synthetic bars yesterday with today's implied volatility are at the wrong level. However, what kind of like going on with what folk are saying, now if you were actually trading intraday or backtesting with the wrong implied volatility possibly, if you bought at this bar, let's say you bought at the open of this bar here, well, using the synthetic contract, you would buy here, and let's say we sold it here or maybe here. Well, that difference is going to be approximately the same. We could be off by the spread or something, but nothing's going to be perfect. But you can see how the level, if what I'm saying is if we bought at $4 here and sold at $5, or I'm not sure, I can't really see. Sorry, I'm getting my eyes operated on tomorrow, so I can't really see too well. But we're at actually whatever this is, 333. Well, I'll just call it 310. And if we sold it at 350, that's a 40-cent difference. And that's going to be about a 40-cent difference if you were actually trading the real contract. So I guess the point is if you're trading Horizon, if you're doing an intraday backtest, these synthetic bars actually get you pretty close in my experience. But now once you start crossing a day, then things change quite a bit because the implied volatility is going to be different on different days. And then you would need something a little bit more dynamic. Now, let's go back. Let me get the live implied volatility. You can see actually this actually lined up quite a little bit better throughout the history. And this was using the implied volatility from historic volatility. Okay, so I used the historic volatility with, I think I was using 255 bars. So it was over a year. And I think the two parameters I like to use Fibonacci numbers, so 255 and 89. So you can see that it actually followed the contract quite well throughout this whole week, right? Using this historic volatility. The price wasn't exactly where it should be today, but if I were trading this over multiple days, this might be a better estimate to use, right? Okay. Any questions about that before I move on? Because this is probably the biggest point or the biggest part of backtesting and trading with options is getting the data that you need. So I personally, I think probably the synthetic, well, first of all, yeah, expired contracts really aren't available. This kind of data, this intraday data isn't really available. Now, and there isn't any provider that I know of that would give you this kind of data at this granular level for expired contracts. As soon as the contract expires, the next day you can't even get it you can't get the expired contracts from the broker. So if you're really diligent and you know that you're trading like whatever index options, you might be really diligent about collecting them, then you can use that data for backtesting later, but it's quite a bit of work to do that. Now,
I have a question here. Someone was asking same data with Think or Swim. That is a question, meaning if I use them, Schwab, as the data provider, backtest should be okay.
Well, okay, so Thinkorswim isn't, we don't, okay, so Schwab, as we just connected to, and as far as I know, right now, there's no option data, pardon me, there's no historical data for options that we can access yet. I haven't found a way to get to it, so it's possible it's there. I know it's in Thinkorswim, just like the other brokers have it. And even with Thinkorswim, well, in fact, I'm connected to. I could get the futures. I can get a futures contract from Schwab. Let's see if I get it here.
Yeah. So what
Sure
I think what Robert is saying, we're just about to build an interface with them, but it is a headache.
Well, yeah, right now we don't have historical options with Schwab. But everything else is built out for Schwab, so you can get the options contract. And I'm going to show you that in a second. We can get the Greek snapshot, which actually works better than all the other brokers, and we're going to get to that right now, actually. So
one second, Robert, before you continue, I've got a question here. So if you switch from 5-minute chart to daily, you would. You can get the synthetic option prices as well. That's the question.
Well, the synthetic we can, yeah, but okay, but if I did this, the way the script is set up, it's probably pulling from, it's getting the first, well, let me show you. This first bar history comes from this one right here, comes from Interactive Brokers. You can see this IB historical instance. I'm getting the option symbol, and then I'm getting the history. So if I changed without doing anything else, if I changed to the daily scale, that call would fail, because Interactive Brokers and Tradier don't give you daily data for options. Okay, so what you would have to do if you were interested in having the daily bar, you would have to get a history unsynced, get it in 30-minute bars or something, and then scale it to daily. Okay, so you can do it. It's just, like I said, it's all about working with the data and the options that you have.
So Robert,
yeah,
I think the question was, can you just get the synthetic option for daily?
Oh, sure. Yeah.
Plus,
we have it set up here. Yeah, of course. Yeah, the synthetic option will work for daily. Yeah. That would work. I don't have it set up right here, but
I think there's data providers who give you the end of day data, whereas as we all know and can see, that there is a bit-ask spread. But yeah, the synthetic data, and I think that was the question exactly.
Let me see if I can do this without getting.
Robert, why don't you continue? Because I know whenever you do something or anyone, even me, is not
okay. Well, I'm kind of done with this anyway, so I'm just gonna.
Okay, good.
Now, let me pull this. Let me just try this really quick. Okay, yeah, this should work. So now if I go to daily, because now I'm getting the contract. I'm getting a contract from IB and now I'm just going to switch to daily if I can find it. There it is. Now let's see what happens. Yeah, well, of course, this contract, the way I have it set up, this contract is I'm only getting non-expired options in this Friday's expiration. So there you're about.
So Robert, would it be possible not even to get a contract and to just create a synthetic option?
Like a continuous
contract. So the way the synthetic options work, you still need an expiration date. But yeah, let's see. If you want me to do it, I can wait. We still have to define. Let's see, how come? Yeah, we're syncing to the chart. So how would this work?
Maybe it would simulate getting the contract.
Well, actually,
the closest one expiring in 30 days for each day or something. I don't know.
Well, so yeah, if you're backtesting generally that's what happens when you're backtesting. You're going through each bar and you're saying, okay, which contract do you want? Do you want the one that expires in 10 days or 30 days or at least 30 days out? At the end of that, of course, then that contract isn't tradable anymore. Even for the synthetics, it doesn't make sense to work with that one anymore, right? Let's see. I'm actually kind of what? Oh, I'm sorry. I know why. Because we're only requesting one. I thought I had it on the year of data. So if I go back to a whole year of data, and then I look at that. Okay. Just wondering why it was so short. So yeah. So this would be that contract. This Friday's weekly contract in daily bars, right? Based on Well, this one's actually based on the historic volatility. So you are getting some, yeah, does it?
Yeah, that's
I mean,
exactly what we were looking for, I think.
Yeah, well, you can do that, but nobody would be trade. It doesn't, if you're an options trader, you know that that wouldn't make sense to do this, especially with a weekly option, right? Because a weekly option wouldn't be traded. This weekly option is probably wouldn't be traded even last week. So let alone last year. So, but you know, but yeah, that's, yeah. So what ends up, let's see, let me get a, how can I go? Let's get I just want to do an expired contract. So what that looks like, use expired is.
But I think that already looked pretty, actually, it's a proof of concept, what you did just now. And the way it is maybe used by any one of these users here or future users might be a totally different way. But I think that's what, that was the question, and it can be done.
Right.
You know, just the question of being able to do all these programs.
Yeah, I was trying to get a contract previous to that, but we can do it, but I'll have to get in the code, and it's gonna be a few minutes that I don't want to spend doing that. So anyway, let's get rid of this and let's move on to the next demonstration. Yeah, one thing I talked about was, this would be really quick, was converting option symbols. For example, somebody just asked about Schwab. Well, if you were able to get an option symbol, if you're using a bar history from Interactive Brokers or something, and you wanted to trade at Schwab, you would have to change that symbol on the bar history. And so we have this, okay, let me just click on that. You can see we have this thing called the option helper, right? And the main things from the option helper are, we have this convert symbol method, and well, let me just go over that because that's what we're talking about. So I'm just going to run this, and what it does is it grabs one contract at IB, and then shows you what the symbology is for all the other ones, right? So just by calling that, you can get the symbol that you need to trade at these other brokers, right? So this is the original symbol. You can see Tradier is similar to Schwab, but Schwab has the underlier. It's a space. It's a six. I don't want to say this. 6 characters, right? Space filled. So, and then IQ Feed has a really weird, IQ Feed and Collective 2 actually have a really weird symbology, because they use letters for the month and an option type. So depending on the month, like October, and if it's a call or a put, this letter changes. So it's really confusing. It's hard to, unless you're really familiar with it, it's hard to really work with that symbology. But using this to show you what's there, this option helper, this convert symbol, you don't really have to think about it so much.
I think for the guys here there might be some who found that very interesting. Do we have it on the website somewhere, or can we post it somewhere?
Well, yeah, I can post these scripts easily, right? So we can, yeah. Is that what you mean? Post the scripts? Yeah. So anything that I kind of put this together just to kind of as talking points for today, but yeah, it would be useful probably for some of you guys. Although in this case, you would have to actually have Interactive Brokers for this to work, right? So, but we also have there's examples in the quick ref and everything too. So the other nice thing the other nice method is these symbol. We can extract. A lot of times you'll be working with the symbol and you'll want to know what the strike is, or the expiration date of that symbol, or what kind of a option you're working with at runtime. So we have these symbol expiry, symbol strike. There should be 2 more in here: symbol option type and symbol underlier, right? And so I did a couple of them here. So I just used that method to tell me what the strike price was, and you can run it on any of those symbols. Doesn't matter what the format is. It will tell you what the strike price is, and you can get the expiration date out of that too. Okay, so you can, based on the symbol that, let's go back here. Whoops. Based on this, we're using this GetOptionsSymbol. I haven't talked about that today. I did talk about it in the last webinar, but the GetOptionsSymbol, this is the way to identify the actual symbol that you're interested in at runtime, right? So the GetOptionsSymbol, all the providers have this, and the first thing that GetOptionsSymbol does in the background is it downloads the option chain, so that it's actually picking strikes from the dates that you're interested in, because they change, right? And I'm gonna demonstrate that here pretty soon with a snapshot. But so you can imagine running this in a strategy, which I'll show you later. You just pass the bars object of the underlier, the type of option you want. Value, well, this value is about this isn't possibly the best way to do it, but if you're trying to get the at the money call, for example, you would pass the current price of the instrument, right, of the underlier. And then we have one of the parameters is get the closest strike or get the next one up or the next one down based on this price. Okay, and the current date is kind of a reference date. Well, I'm just using a variable called current date, but it's if you're running in a script for every bar, you would pass the date of that bar and you would say, okay, today's the current date, and I'm interested in strikes or in expirations that are at least one day out or 10 days out or whatever, right? Okay, you can specify if you want to use the weeklies or just the standard expirations, monthly expirations, and if you're going to allow expired, right? So obviously, if you're trading, you're not going to allow expired, but if you're backtesting and you're backtesting with expired contracts, then you need to set that true. Okay, so all it's one call. You can almost specify exactly which option you want, the contract you want. And the reason I say that is because one of the things I didn't really realize is that a lot of you option trade, because I'm not really an option trader, I do dabble, but, identify a contract based on a Greek, right? Like a delta. You might want a 0.2 delta for your call, right? Or 0.8 or something, depending on what your strategy is. And so you can't use that to get the symbol, right? But I'm going to show you how to do that. And maybe we can modify this later or upgrade it. Okay, so that's kind of a quick overview of what the option helper does. There's actually another one called price at delta. And actually that actually might, let's see, let's just open the sample code for that one. Yeah, actually I forgot about that one. That was kind of a new addition. So the idea here is, okay, so if you actually specify the delta, so yeah, okay. So actually what that method does is if you tell it what delta you're interested in, okay, you can get what the price, the approximate strike price of where that contract would be, and then you can pass that into your GetOptionsSymbol, and then you could get the at the money contract for that. So yeah, that actually is a way to get a price at delta kind of directly. Let's see what this. I just run this. I don't know what this does actually. I haven't. Okay, so yeah, so I was picking a delta at 0.12. It said the strike price at that delta for SPY is 595. So this is an estimate of what the strike price would be for this delta for the contract, the 595 on this date. Okay, yeah, this gets confusing really quickly, right? But yeah, so this is the October expiration. It'll be fun. Let's look that up. Let's see, political tools. Where am I looking for? I'm looking for options trader chain. Option chain probably get me there. So we're looking at SPY. Okay. So let's look at the October 18 regular date. And what's okay, let's get some more strikes here. Okay, so we said that on the call, and we're looking at a call at 0.12. So where's the delta column? Hopefully I got delta here. Don't tell me that I have delta on this. Okay, so this is the one I wanted. Okay, we're gonna have to do this a different way. I know that maybe I can do it. Sorry, let me try one more time. The option trader, I think. This is interactive brokers, right? So I should probably do it myself using the snapshot. Since I started down this path, yeah, we got delta on this one. Let's wait for the video. Okay, we're on October 18th, and we go 0.12. Well, 0.12 is about here. Well, now it's at 588. Let's run this again right now. Let's see what we get. I don't know if it changed. Yeah, well, we're pointing at the 595. Well, we got pretty close. 0.1. It's more. Well, let's see. Delta is this one here. Yeah, so it's about 5. The actual one is about 588. So for 0.12, yeah, we got pretty close. That was our estimate. So yeah, that's the idea, is that if you're trying to find a strike close to a delta, that's one way to do it. But there's actually a better way, and I think that's what we're going to talk about next. Let's get rid of this. We go to the number 3 here, and option delta symbol. Okay, so the next thing that we built out was this thing called, it's called GetOptionChainSnapshot. Okay. And I don't know if, Eugene, you're not InterTrader, are you? You're on mute, but somebody, I can't remember who InterTrader is. No, I think that's someone else. Some InterTraders really pushed us quite a bit to improve some things here. And this was one of the results, was this option chain snapshot. Let me just run what we're doing here is I actually created a procedure that says get contract at delta, okay? And so the first thing that it does is, let's see, it gets the history. Well, actually, no, it calls it, okay, so yeah. So we're actually getting the contract. We're calling this procedure here, which the first thing it does is, I can't make this bigger, can I? The first thing it does is it calls this GetOptionSymbol. And let me just run it. I'm not sure. I can't remember what. Okay, yeah, this isn't actually what I wanted. I think I got another one. Oh yeah, the demo is actually the next one. This is actually, this one will actually make a little bit more sense. So this is, yeah, this one just calls the snapshot, right? So if you're interested in the Greeks and you want to do some processing and look at the snapshot while you're trading, this is a live snapshot. You would call GetOptionChainSnapshot. And so I'm just going to run this really quick, and you'll see this actually uses the Schwab snapshot, and it's great because it comes back immediately. And so you can see what I've done here is I printed out the entire option chain for this expiration, which is this Friday's expiration. And what we're looking at here is we're looking at the date of the last trade, I think the price, the last price, the delta, or the implied volatility, the bid, the current bid ask. So you can get all that data with just one call. And then now that you programmers that you see this, what all you do is you just look through this table and find the delta that you're looking for. Let's see, were we looking at TTD before? So if we go to delta 0.12, it's right here. Yeah, we're looking at, well, no, we were looking at something else before, right? I think we were looking at, what were we looking at? I can't remember. This one, oh, SPY, right? Yeah, let's go back to this and let's run this on SPY. Of course, yeah, this is going for Friday's contract, but anyway, you can see you can get all this data very quickly. Here's the point. Here's, oh, that's 0.12. 0.12 is about here. So for this Friday, the contract would be 585 or the 580 or the 581, and that would be the way to select it, right? So yeah, this is each one of the brokers would have this implemented, right? So Schwab has it implemented quite well. It works fantastically, really fast. You get all the data really quickly. Now, if I ran this with IB, does it quite a bit differently. You saw when I pulled up the option chain from Trader Workstation, it took quite a bit of time for it to populate. Well, that's because the contract has to move a little bit. There needs to be some sort of a streaming change for us to get a result, okay? So again, depending on which broker you have, things work a little bit differently, but all these methods are implemented somewhat in the same way so that you're getting the same kind of data, right? So you can switch between them pretty easily. Okay. Yeah, this was just a demonstration of working with one contract specifically. We can get all that data very quickly with the snapshot, or we can just request the Greeks for one particular contract, which is what this script did. Okay, let's see how we're doing. Oh, well, we're getting pretty close. So let's kind of go back to what we're doing here. Let me show you now. I just wanted to show you that when you start trading options as an external symbol based on an underlier movement, things get pretty complicated pretty quickly in a script. So on the right here, I have just a pretty simple script that's trading Tesla based on the RSI. When the RSI crosses above whatever this value is, the oversold is 30. When it crosses above 30, it buys, and when it goes over 60, it sells, I think. Okay, it's a 5-period RSI. And that script, as you can imagine, it's quite easy, right? Just pull up the code here really quick. Just a couple rules. We grab the RSI. We check if there's an open position, an open long position. If the RSI crosses over this parameter, we place the trade to buy at market. And then when we go over 60, we sell it. That's all there is to it, right? Well, that gets pretty complicated if we want to do the same thing with an option based on, let me back up. If you actually knew which, let's do that too. you actually knew which contract you wanted to trade when you start, you could use that same script, right? So we could just, I'm going to call that, let's say we're trading, and I'm going to use IB. Am I going to use IB? Yeah, we're using IB because I've got my paper traders set up here. So we'll trade this Friday, 24/10/04. Well, let's just call it the 560. And it's going to tell me that it can't get the data because I'm trying to get it based on daily. So I made that mistake already. Got to wait for it to go through all the providers. Okay, so let's first get a intraday chart going. And now let's request that option. What did I do wrong here? Let's check our data options here. We got trade here. Interactive brokers are all set. So how come I can't get? It's interesting. Let me just clear the tracking request in case I something wrong here. So we got TTT SPY. That's why I went to SPY. I was putting the wrong. Yeah, of course, there's not a 560 contract for TTD. So here's the. This is the, since I'm requesting, this actually was requested by Interactive Brokers, and I'm using the midpoint pricing. By the way, really quickly, just for those of you that trade with Interactive Brokers, the midpoint pricing is the option is in the configuration here. If you actually wanted the trade data, you have to just, well, let's go ahead and do this. If you wanted the trade data, you could select trades. Now, this is a cached history, so I'd have to refresh it now. So let's just refresh it, and you'll see the difference, okay? So you can see there's not much to work with here. These are the actual trades for that contract, and that's not something that you really want to probably work with, right? So let's go back to our midpoint pricing and refresh that chart again, reload it. And IB is being nice to us today. You'll notice there's no volume because the midpoints just don't give us volume. Let's get rid of the volume pane. Let me drag over the RSI script. Okay, so this is, and we can stream it. And we'll have to wait a few minutes for this one. We're doing 5-minute bars. But the point here is that if you knew what the contract that you wanted to trade was, you could just throw it in a chart just like any other stock symbol. And the indicators are going to be created based on that contract, and that contract would auto trade itself. Okay, any questions about that? That's not the hard part, right? The hard part is what we're going to talk about next. Because being an option contract, it's just another symbol. And so it would trade just like any other instrument that you're used to trading in WealthLab. I'm going to let that run. Maybe we'll get we're not probably going to get, let me switch to 1-minute chart. It might take a little bit longer to get this one. Okay, let it refresh in a bit. I'm going to let that auto trade. Okay, so we looked at what that easy script looked like, but now we're going to look at what it takes to take the underlier, data from the underlier, and then trade an external symbol like an option. And I'm trying to find which one it was. Oh, the RSI option script. Okay, so you can see this is a little bit more complicated. Okay, and admittedly, I added a few more things, and I don't want to go over every line of this, but it kind of has almost all the pieces that we were talking about before to make this happen. In fact, what I'm doing is I'm actually grabbing historical data from Tradier because that's fast, which is the actual trade data. But since it's an external symbol and I'm trading the bars of that symbol, I'm not really worried about having everything filled in, right? So I can use that bars object to trade. But however, since I'm getting the Tradier symbol, I need to convert it to the IB symbol to trade it because I'm trading with IB. I'm trading it through this paper trader for the trader workstation. Okay, so those are the kind of things that you have to deal with when you're writing backtests and trading scripts for options based on an underlier. So again, we're getting the RSI based on whatever our underlier is, and we're using the same rule where instead of trading the underlier, we're trading a contract, we're trading the at the money call. Okay, and so I'm looking at, like I said, this is the execute loop here, right? So I'm passing the current value of the bar, right? The current date, and I'm saying, well, even if it's Friday, I'm going to use the Friday option. I'm using weeklies, so that's going to give me the Friday weekly. And use expired is going to be false. I probably set up here somewhere. Okay, and then again, we have instead of just checking for long positions, now we're in that external symbol realm where we need to find positions for all the symbols, right? And then we have to identify the option contract. And so I actually created a hash code, probably a little bit complex for what we need to do here, but what this does is it just gives me a number that identifies that contract. So if the contracts are switching, if the at the money contract is the 470 or historically earlier in the day and it's the 480 now, that hash code is going to be different, so it identifies a different contract. So that was something that I think is kind of useful to use that method. Yeah, and so the way I've got it set up here is that when we go into our exit logic, I'm just looking for a quarter limit and stop exit, right? So I'm looking, that would be, depending on how many, that's per contract, that would be $25 a contract profit if I were able to get it, right? So let's just see if like I said, we've been trading this ever since we started. So you can see there's quite a bit of trading going on, but I think the market's not cooperating the volatility now. Looks like it's probably starting to go up. Yeah, we bounced off the bottom and now things are on their way up. So we're probably not going to get down under so I'm going to have to bump the RSI up a little bit to get a trade going here. Let's go with get an exit right away, but let's bump this up to 68 and maybe we can send off a trade here right now. It's calculating, and did we get, no, it didn't. Oh, we didn't get 68. Okay. Oh, well, yeah, I know it's kind of a lot. I probably the next time we talk about options, maybe we should concentrate on a particular strategy and how to make that happen. But I think it's really important to go through these data options, because that's going to be the first challenge when you start getting into this auto trading with options. You have to work with the data quite a bit, and just so that you know that I feel like we've got things in place pretty well to be able to get the data. And one thing that I did want to mention, because somebody was asking me about expired contracts, and I finally remembered that there was a website, option sample data. It's called historicaloptiondata.com. Okay. Now, I discarded this a long time ago because basically what this does is it gives you kind of the closing price of a contract on possibly throughout the contract's history. The closing price isn't really much to work with, right? If you're trading at market, you don't have the open to work with. The closing, what can you do with it? But the thing is that I looked at this again the other day, and this was a sample record of it. Blow this up a little bit. And the interesting thing about this is that it gives you the implied volatility. And the reason that's interesting, if you remember from the beginning of what we started talking about, if you knew what the implied volatility was, the synthetic options give you a pretty good idea of what the history is. Okay, so this combined with, you'd have to subscribe and get this data and then work with the CSV files and stuff. So it's not like a slam dunk, but there is a way to get a pretty good idea of what the option history was for expired contracts using, and I did check this for a couple of them, the implied volatility, at least for these recently expired contracts, was correct. So anyway, just to let you know, that's out there, historicaloptiondata.com, if you're interested in looking at that. All right, just got a couple of minutes left. Were there any questions, Volker? Are you there looking for questions?
Yeah, I'm here. And yeah, I was just about to, I think I typed it again, but you guys, I think this is hardcore, moving left and right. But for option traders, it's always a dream of traders, system traders, to convert basically a good strategy into an option strategy, because then you can really leverage your profits. But it hasn't been something, I was just typing to Dion, this is too complicated to do. However, I always say if there is a will to trade something, then there is a way. When you say, oh, commission is killing me or slippage, then there is a way to do it if you're really willing to go that deep. I find it totally interesting to see what you can do with this, and yeah, and it is doable, let's put it this way. but it is work. Nothing comes easy.
There's,
But
you
hey,
know,
let's ask. If you have questions, go ahead and ask.
It's don't be scared about it though, because we do have a lot of there are a lot of examples, but you know, it is a lot. There's a few extra calls, and trading external symbols is a little bit more difficult anyway, but it can be done. So ask questions and we can help too. So by the way, there's an options blog on our website that have a lot of examples of different strategies, option strategies that you can borrow code from. I probably need to look at that to update it a little bit, but it should work still. So options blog. I was trying to get a trade to run off, and I can't quite catch it. I can't quite catch the right. Yeah, I don't think we're going to be able to get another one, but you can see it's been, yeah, like for example, this one just filled it. Oh, actually that one just filled 622. No, it filled a while ago. Yeah, looks like the market started going up about 40 minutes ago and it hasn't really come down. So yeah, anything else? I think we got right up to the end.
Oh, wait, I've got messages here. Yep. In order to leave, wait, I need to read this. Someone is saying it's good stuff, great functionality, new at and needs to get used to it. Obviously, he knows some C#. And here we have, in order to leave the low level, one could perhaps start to offer a dynamic data set that simply offers call put options. The data set would need the parameters for which months you need to buy, sell options. I think we first need data sets issued by.
I'm not sure that I understand that, but yeah, the options data is okay. Just to give you an idea, because I did this once. If you tried to get all of the option contracts for just Amazon, how many do you think there would be? The answer is like 20,000. Okay, so there's like 20,000 contracts at any given time for just Amazon. And that's why brokers don't keep up with the expired contracts. It's just too much. So yeah, like I said, if you wanted to actually trade with real data or backtest with real data, I've actually been collecting it because I had a concierge support that I wanted to see how it really worked. And the support requested, he was interested in trading, sorry, I'm trying to figure out the email, which one is it? Oh, the SPX index options, right? And so I've been actually collecting the index option data, the midpoint pricing for that for about a month. And it's pretty difficult to keep up with, right? You have to loop through and get about 50 contracts every day because the weekly contracts for index options they trade daily actually. So there's one every day. And yeah, so yeah, we won't be supplying data for options, but like I said, the synthetic feature, which this is the way options are priced anyway. The trick is getting what the implied volatility is. If the implied volatility, then and like I said, the historic volatility gets you pretty close. By the way, the historic volatility indicator you need to divide by 100. So that works with the get history for the synthetic contract.
So here's the reply. For this reason, it must be possible to give the data set a parameter to filter out the number of possible options in a data set. Yeah, it is a great project and probably a lot of work. So there's tons of interesting approaches, and this is quite a bit of a change. I don't know whether anyone has this kind of data.
Yeah, but still, I'll go back. The idea is that when you're creating strategies, right, you're looking forward. You're looking at the expiration either this week or next month or in 3 months or in 6 months, right? And they all have a lot of different properties, right? If you're trading Friday's expiration, that you're going to lose a lot of, and you hold that contract for a whole week, you're going to lose a lot of option value based on the theta, right? The time value. Whereas you might, if you know that you're going to be holding an option for a while, well, then maybe you would trade one that's 6 months out where you wouldn't lose much theta. So these are all part of the option strategy of which contract that you're actually going to trade. Yeah. So I just the contracts that I'm collecting it's because this particular customer was actually day trading, right? So he's not holding the contract more than a day, and he's day trading tomorrow's contract or the next day and actually combining it with another one a few days later. So yeah, so you might be able to say exactly which contracts and which strikes that you want, because those are the ones that are well, actually, depending on which delta you're trading. If you're trading 0.1 deltas, you're way away from where the index is trading anyway. So anyway, it's all part of the strategy, and I think the synthetic options, the synthetic data is the way to go. It's the only one that's really manageable, I think, and it's actually really easy to use.
Okay, so whenever I say I don't see, okay, I admit the issue is highly complex and it can't simply be solved. Yeah, it is. Anyway, so I don't see any questions anymore. For those who have specific questions, it's either our forum or even here, I'm going to publish this webinar. And you can then ask on YouTube, which also is good for us because then we get more traffic there. And maybe it involves some other people there, or even on our website, or maybe Robert is available directly via email. So for some high secret questions.
Oh.
Anyway, so
I've actually been getting some trades. I wasn't paying attention, but some trades just went through. You could see.
You got some trades, some real ones?
Yeah. So I guess you can go back and I noticed that we actually lost. This was actually a problem. You'll notice that we actually have an orphan position here, and maybe two of them. And the reason is because I made a mistake when I created the script. I wanted to show those limit and stop orders, and the problem is that if the limit or stop doesn't hit, that order gets canceled and the strategy continues on. Okay. And so I didn't really clean up the strategy well enough to take care of those orphan positions.
So this is real trades now that you
the real trades in the Interactive Brokers paper account, right?
Oh,
this is but I'm not trading this, no.
Well, yeah, no, it is interesting to see because it's basically real trades executed at a certain price and with a certain quantity. So it is interesting to see, and this would be really interesting to see, I guess, but we missed that. Anyway, guys, maybe we can get a session just with that, just the strategy and how it then gets executed. Thanks for coming. Have a lovely morning or evening wherever you are, and talk to you guys then. Bye.
Thank you. Bye-bye.